Warren Buffett is loading up on a new stock, but he is going out of his way to keep it a secret. In a recent filing, Berkshire Hathaway requested confidential treatment from the SEC so that it could quietly invest in a new company before revealing that investment to the public. But I think the Oracle of Omaha has already showed his hand, and I'm going to walk you through in this video step by step why I think I know exactly what this secretive investment is. My name is Brian. I'm a former investment banker with a Master of Science in Finance, and my goal is to help you master the market. All right, so let's get up to speed on this situation. Every quarter, Berkshire Hathaway files something called a 13F. This is a filing that any investment manager with over $100 million in assets needs to file every quarter to publicly disclose their investments. And many investors track these filings closely to get an inside look as to what other smart investors are buying and selling. But this can also cause issues for big investors like Warren Buffett, and here's why. When the Oracle of Omaha invests, he's typically buying billions of dollars worth of stock at a time. If he were to try and buy it all at once, the price would likely skyrocket and his opportunity to profit would be over. So what investors with big assets do is they typically build up their position over a period of weeks and months before revealing it to the public. Sometimes these windows of opportunity can conflict with the deadline that the companies have to file the 13F, and this is exactly what's happened to Berkshire Hathaway. But they do have one workaround. In the 13F filed on May 15th, the Omaha investor omitted a new investment from the filing and requested special confidential treatment from the SEC. This allows Berkshire Hathaway to continue building up their position without letting the cat out of the bag. But despite Warren's best efforts to cover his tracks, we can actually uncover a lot of information from just this one filing. First off, this information is for the period ending March 31st, so we know that this investment started in Q1 and has continued into Q2. Another clue is that Buffett knew ahead of time that this filing deadline was going to come sometime around the middle of May. And if he was done buying the stock by now, then it wouldn't have been an issue to make it public. But because he's chosen to take a vow of silence a full month and a half after the quarters ended, this is an indication that he's likely still buying this stock as we speak. And I am determined to find out which one it is. And to do that, I'm going to need something called a stock screener. This is a piece of software that allows investors to take the entire investing universe and filter out stocks and investments based on specific attributes. The one that I'm using is completely free and it's run by a website called FinViz. By the way, this video is not sponsored by FinViz. I just happen to use their software because I think they provide a lot of value without charging any money, which I'm sure my subscribers are used to by now. Anyways, no matter what screener you use, it is useless without inputs. And that brings me to what I said earlier when I said that I think the Oracle of Omaha has already tipped his hand. If we look at the 10Q filing from Berkshire Hathaway, we can see some more information about how the company's portfolio is changing. Specifically, their financial holdings went down, consumer products went up, and commercial, industrial, and other also went up. For those first two categories, those pretty much line up with what we see publicly in the 13F filing. For example, with sales in Bank of America and Citigroup, and a large purchase of Constellation Brands. But the third category of commercial, industrial, and other doesn't really have a good match in the 13F filing. So now we can guess that the Omaha investor likely bought around $2 billion worth of stock in Q1, and it wasn't from a consumer or a financial company. Lastly, we also have a pretty good idea about Warren Buffett's investment criteria. From interviews about previous investments, we know that he's generally looking for a forward price to earnings ratio below 15 and a long-term earnings growth of around 7% or more. Additionally, the Oracle tends to prefer companies with very strong brands and healthy customer retention. So let's take stock of what we know and see what stocks we can find with this information. Given Berkshire increased their investment by around $2 billion, this means that the company we're looking for needs to have a market cap of around $10 billion or more. The company also needs to have a forward price to earnings ratio of below 15 and forward earnings growth over the next 5 years of 7%. But FinViz makes me pick between 5 and 10%, so I'm going to go with over 10% for this exercise. And finally, this stock is not in the financial or consumer sectors, and it's likely a very strong brand with very good customer retention. Oh, and of course, with all of this investment from Berkshire, this company has likely seen a pretty large increase in trading volume during Q1 and into Q2. This gives us a list of over 137 stocks to choose from, but after going through them one by one, I've narrowed this down to about 7 that I think could be good candidates for the stock that we're looking for, and honestly, you're going to see that these are all going to make for pretty good long-term investments. First up is Dell, but their volume has been pretty flat in Q1, and I wouldn't say that they have the strongest customer retention. Next up was CVS, but their volume has actually started to decrease in Q1, so it's probably not this one. Honda also fits this criteria, but their volume has been pretty flat in Q1, and I don't think Warren Buffett would be investing in any automobile manufacturers given the current noise that's going on with tariffs. Fourth on the list is Charter Communications, which at first glance has a little bit of an increase in volume in Q1, but they also recently announced a merger with Cox, which sent their share price higher. Then there's Stanley Black & Decker, which has a pretty strong brand and even had a recent spike in volume. But this happened in April, and it's important to remember that even though the 13F filing came out in May, it's for the data ended as of March 31st, and Stanley had virtually no change in volume over that same period. So this is very likely not the stock that we're looking for. Number 6 is First Solar, and this is the most promising one so far. Normally, this stock trades about 50 million in volume per month, but recently there's been an increase of about 15 million shares traded. Additionally, the price was around 130 per share, and $130 times 15 million shares traded is around $2 billion. But something just isn't sitting right with me. First off, First Solar isn't something that I would call a household name. Secondly, while the excess volume matches the $2 billion investment that Berkshire's made in Q1, that would imply that Berkshire made up 100% of this increase in volume, and that is rarely the case. Thirdly, the solar industry is still very new and reliant on government subsidies, and based on everything I know about Warren Buffett, I do not think that this is an industry that he would be putting money into. Therefore, we're left with one last company, and that one is ADT. And the more I dig, the more I am convinced that this is the secret investment that Warren Buffett is making right now. For starters, ADT has had a surge in volume during Q1 of this year. Before 2025, the company averaged around 100 million shares traded per month. But through the end of Q1, around 420 million shares traded hands, and that has continued through April and May. And at an average price of around $8 per share, that would imply about $3.4 billion in excess trading value, which is more than enough to explain the $2 billion investment that's in Warren Buffett's portfolio. ADT also checks all of the financial boxes. Their current PE is under 15 times, their forward PE is 9.2, their earnings projection over the next 5 years is 12.6% annual growth, and they even pay a 2.3% dividend, which I know Warren Buffett is a big fan of. And there's one more thing I haven't touched on yet. Not only is ADT a strong household brand, but they also have a gross attrition rate, or the number of companies leaving their company, of only 12.6%. So, given everything that we know about Warren Buffett's portfolio and his historic investing style, I'm feeling very confident that we're going to see an announcement in the next 3 to 6 months that Berkshire Hathaway has acquired a position in ADT. But wait a second, is it really that easy? And if this is Warren Buffett's secret stock that he's investing in right now, should we be buying it? To be honest, it's usually not this easy, and there's no guarantee that I'm right. I certainly think I'm right, and what I can tell you is I will be investing in ADT stock when the market opens this Monday. But that's because I think this is a fundamentally good stock, regardless of whether or not we find out that this is indeed Warren Buffett's secret new investment. In fact, just about any of the companies in this video would probably make good long-term investments. Almost as good investments as subscribing to the channel. I mean, what's the ROI on free? Like infinite percent? See you next time. But because he's chosen to take a vow of silence a full month and a half after the quarters ended, this is an indication, at least. Ow, that hurt. You clawed my leg. You're pretty though. You're either going to get me a lot of viewers or they're going to get confused why there's a cat in my investing video. And I think I'm okay with either one.